Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Doug chat channel. That's a great place to post questions, comments, and content related to the topics of my presentation and the topics of the channel that I'll go through in just a moment. I'm also on X, formerly known as at Twitter. My name there is at Doug Pless. The focus of my presentation today and the focus of the Options-Doug chat channel is options, order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step of my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis and for setups for entries and exits. And when I talk about setups today, I will be talking about an underlying asset. And setups in that asset can be taken any number of ways depending on the asset. For example, the S&P 500 futures, S&P 500 setups can be taken with the ES futures, SPY shares, SPY options, SPX options, or even ES options. So quite a few choices there for the S&P 500. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel and Discord, as well as the chat and YouTube for your questions and comments. Please feel free to post, and I'll do my best to answer your questions. And hello, Stephen, welcome, glad you're here. Hello, Dan P. Welcome, glad you're here as well. All right, here's my agenda for today. Wednesday, December 13th. First of all, I want to go over news items, economic data, and events for today as well as the rest of the week. Then I'll go through my positional analysis. And then I will review some setups from this morning and then look at the live market. So today, let's get right to the news. And note that I will shift to the live market just before the FOMC announcement, whether I've finished wherever I am in my presentation. We'll pause and go to the live market and watch the S&P 500. And give me just a moment here. Getting my other computer set up so I can watch CNBC live. All right, so let's start with the news items for today. So first of all, there was some economic data this morning, PPI data, that came out at 8:30 a.m. Eastern Time. This is following the CPI data from yesterday. There was a positive reaction to that. This is the PPI data, and really mostly came in line or less than expected, less than previous. So the initial response to the PPI data was positive. Oops. then a move lower, and then right around 10 a.m. the S&P 500 moved higher again. So we'll talk more about this in a few minutes, but the initial reaction to the PPI data was positive. All right, then of course the FOMC meeting, the announcement is at 2 p.m. and then the press conference begins at 2:30 p.m. as I will be wrapping up my presentation today. All right, so here's the CME FedWatch tool, and note the current target rate is at 525 to 550 basis points, and that is widely expected. Look, a little over a 98% chance, according to this Fed Fund Futures, that the Fed holds rates steady at that 525 to 550 level, and less than a 2% chance that they raise to a quarter point. All right, so that's the Fed Watch tool. So that is the data for today. Then tomorrow, retail sales data comes out at 8:30 a.m. Eastern Time, and then on Friday, PMI data comes out at 9:45 a.m. Eastern Time, and then really the most important thing is the options expiration. And this is the showing delta notional for options expirations for the S&P 500, NASDAQ, and Russell 2000. This is the December options expiration. Very, very large expiration, typically around the largest of the year. The orange bars are showing call delta, and the blue bar is showing put delta. Note this is a very, very, very call-dominated options expiration. These calls have been stabilizing the market, and a lot will expire, and that should release some volatility after options expiration on Friday. So coming up to a very call-dominated options expiration, and typically there is a pullback after a call-dominated options expiration, just the opposite of a rally after a put-dominated options expiration. All right, so again, I'll talk more about this later on in the week. All right, so that is the news items for today as well as the rest of the week. Big events, of course, again, the FOMC and the options expiration. All right, let's take a look at the S&P 500. Start with positional analysis now. And so right now, the S&P 500 trading at a very narrow range. And before I take a closer look at this chart, I want to take a look at a larger time frame. I'm going to go to the SPX. This is a 30-day 1-hour chart. And note I've pointed out the turning points every day for the last several weeks. That October 30th day this current rally began, and that is now off my chart. That was led to a huge IV collapse, put Vanna rally, and market makers gamma notional shifted from very negative to positive. Let's zoom in a little bit on this chart. And this 2-week consolidation, not unexpected in a positive gamma environment, looks like the S&P 500 is finally trying to break out. Really, the rally began last Thursday. Just a very steady mechanical uptrend began last Thursday up to right around 4650. So this 4540 to 4600 range of consolidation looks like at least for now, the SPX has broken out of that range. All right, let me point out some levels on this chart, some key levels. So first of all, the dashed purple lines are showing the lower and upper weekly expected move. And I update this once a week over the weekend. Those levels remain during the entire week, remain at the same level. So that's once a week, the weekly expected move. And then the dashed blue lines are showing the lower and upper daily expected move. And that's updated once a day. Note, these levels are based on the options market. And this information is available, it should be available in any trading platform with an options chain. And note that earlier today, SPX did trade above its upper weekly expected move. All right, the next levels I want to point out are the Spotgamma levels. These are proprietary Spotgamma levels provided to Spotgamma subscribers, shown on a variety of platforms. Again, this is Thinkorswim, and I'm going to point out the key daily levels. So these are levels that are based on gamma-weighted open interest. Spotgamma applies their proprietary algorithms to the open interest data to come up with these levels. The 4400 level, that's the put wall. That's the first key daily level that I want to point out. That's a strike with a large net negative gamma that can be expected to act as support. Note that level did move lower from yesterday. It was up at kind of a strange level yesterday at 4570, moved back down to 4400. And the next level up is the volatility trigger at 4585. And that is Spotgamma's proprietary gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure, and that tends to enhance or increase volatility. On the other hand, above that level, market makers' position on the gamma curve is positive, like it is now. And in a positive gamma environment, market makers have to trade against price to hedge their delta exposure, and that tends to subdue or decrease volatility. And the next level, just above that, is 4600. That's the absolute gamma strike. That's the strike with the largest absolute positive and negative gamma. So that's where most of the gamma-weighted open interest is concentrated, at 4600. And then up above that, at 4700, that's the call wall. That's a strike with the largest net positive gamma that can be expected to act as resistance. So that's the potential ceiling for price as it stands now at 4700. And the put wall at 4400, the potential floor. Although to get to 4400, SPX would have to do a lot of work to get through 4600, 4550, and 4500. All right, let's take a look at a shorter time frame SPX chart just to get a sense for the levels in play for today. So this is the kind of the steady mechanical uptrend that began. I'm showing from Monday, showing Monday morning. Very steady mechanical uptrend. Now maybe finding resistance at the upper weekly expected move. Note there are also a couple of gamma levels here. Spotgamma levels 4650, and just below that the 4648. So 4650 is a large gamma 2 level, and then 4648 is a combo level combining SPX and SPY gamma weighted open interest into one combined level. All right, let's take a look at Bookmap. So support and resistance levels not really so far today the ES is not responding to directly to any of these levels. So I have my own cloud notes. So I'm showing SPX levels. They're the two levels that I just pointed out on the SPX chart. The 4650 level and the 4648 level. Note there's quite a large price difference between ES and SPX, and that difference has increased substantially from the December contract last week to the March contract, which is what I'm showing here, the H contract, H24, H4. So I'm using 54 points today. Let me just check what it is now. So it's somewhere between 53 and 54. I'm just using 54. And so I'm showing those levels on my cloud notes, my own cloud notes. Also, there's the SPY 465 call wall. So today, at least for now, no direct support and resistance levels, but these are the levels in play for today. All right, let's take a look at NASDAQ now. NASDAQ, here's the initial reaction to the PPI data. Note, NQ is also trading above its upper weekly expected move. All right, let's take a look at a QQQ chart first of all to see the QQQ levels in play for today. So here's the, oh, and I forgot to mention shifts in that. Well, actually, I did mention shifts in levels for the S&P 500. The put wall did shift lower. That was the only shift for SPX. Otherwise, all key daily levels for SPX and SPY remain unchanged. So here's QQQ. This is the 400 call wall. And there's been, at least in the morning session, price was moving up and down around that level. That is also the absolute gamma strike. And note that absolute gamma strike did move higher from yesterday, from 390 yesterday up to 400. So 400 for QQQ is the call wall and the absolute gamma strike. All right, so QQQ may be finding support at the 399 level, just below that. Let's take a look at NDX now. NDX also a very mechanical uptrend beginning on Monday. And this combo level in play at 16,403. So for QQQ, the absolute gamma strike shifted higher to 400. And then also for NDX, the volatility trigger shifted lower and the absolute gamma strike shifted up to 16,000, the level that has been in play recently. So here's this combo level, and just above that the 365 level for QQQ, shown in my old cloud notes again. Also there again, there's the upper weekly expected move. It looks like I need to update my round number levels. Typically I would have a round number level there for NASDAQ. I'll get that updated. All right, so far the only potential direct reaction with a level is the 399 QQQ. Potentially acting as support, but that could all change in 10 minutes. Whoops. All right, so those are the levels in play for today. I talked about shifts in levels. Most important, really, for NDX and QQQ, the absolute gamma strikes shifted higher. All right, let's take a look at gamma notional now to see how market makers were positioned on the gamma curve at the beginning of the day. Gamma notional, this is market maker's position on the gamma curve for the S&P 500, NASDAQ, and Russell 2000. Note these numbers are quite positive. This is somewhat of an extreme reading. I know Brent Kachuber, the founder of Spotgamma, looks at this Spotgamma gamma index, and it ranges from -4 to 4, so 3.158, quite high. Also gamma notional for SPX at 1.365 billion, also quite high. Note all these numbers are positive. They all increased from yesterday. So again, quite positive gamma notional, and this should diminish potentially starting today, and will definitely drop lower after options expiration on Friday as some of that call delta expires. All right, let's take a look at the Vanna model now. To get a sense of what this means, a graphical representation. So this chart is showing market makers' delta notion of their delta exposure on the vertical axis, spot price for SPX on the horizontal axis. There are two curves on this chart. The first, the light gray curve, shows how market makers' delta notional may change with changes in price only, and the purple curve adds implied volatility to the equation. That's showing how market makers' delta notional may change with changes in price and implied volatility. And that change in delta with a change in implied volatility is the Vanna effect. Vanna is a second order Greek. All right, let's check on the current price. Current price for SPX right around 46, 45, 46. Let's see if we can find that on the chart. So right around here, just above where I'm holding my cursor now, this vertical line. So what this is showing, and this curve is very typical of a positive gamma environment, really more skewed from the left to the right. So what this is showing is as price increases, market makers' delta notional will increase, and they will have to sell futures to hedge their delta exposure. And that's why in a positive gamma environment, the volatility is subdued or decreased. So in this positive gamma environment, spot gamma assumes that traders are short calls, market makers are long calls, and they have to sell futures to hedge their delta exposure as price increases, and then as price drops, they can buy back their short futures as their delta notional decreases. So they're trading against price in a positive gamma environment. So if gamma notional was very negative, I would be looking for a much larger reaction to data like CPI or PCE or FOMC announcement. So we'll see. We've got about 6 minutes, so we'll see what happens. So let's take a quick look at gamma notional for SPY. Right around 464. So also really toward the bottom of the curve here, QQQ. Just under the 400 absolute gamma strike and call wall, right around 399. Near the bottom of the curve also. All right, so that's the setup, positional analysis going into the FOMC announcement. So really the only thing that I could say so far in my thesis is I'm looking for lower volatility due to the very high positive gamma notional. Also keeping in mind that many stocks are very extended. Not necessarily the Magnificent Seven, but many other stocks. All right, let's take a look at the options market, see what options traders are doing, and maybe look at some setups from this morning. So this chart, so everything that we've looked at so far is, other than Bookmap, is based on static data. And that is updated once a day, again based on open interest. And now we're going to take a look at real-time data. So this is the hero signal, hedging impact real-time options. And this is available to Spotgamma subscribers. This is the hero chart for the S&P 500. What this chart is showing is price for SPX and the hero signal, hedging impact real-time options. That is showing market maker options trades and market maker hedging activity for a combined signal for SPX, SPY, XSP, and ES futures. All right, so let's take let me take a look at questions real quick. Armand, OG, yes, I will take a look at the S&P 500 right at 2 p.m. And Samir, hello, welcome. Asked me if I share my analysis and trades in real time at a Discord room. Not typically. If I see something of interest, I will share that. I have been quite busy recently. Have not been able to share anything other than my index relationships. All right, so options traders this morning, initially taking bullish options trades. This is the cash open. Right here, 9:30 p.m. Eastern Time. Note the rising hero line indicates traders are taking positive delta positions, and right around 10:45 that turns around, they start taking negative delta positions, and price moves lower. And note this timely flow alert, helping to set up a long. It took some time for that to play out. Price responded a few minutes later. Actually, quite a bit, probably 25 minutes later, 30 minutes. All right, so long setup, short setup in the morning. Let's go take a look at Bookmap. Go back to the S&P 500. So remember, from the open, traders were taking positive delta positions. And initially, if you followed that, that was good for a few points in the S&P 500. And if you waited, you might have gotten stopped out. Go again at 10 a.m. Good for long. Just watching order flow here in Bookmap. The volume dots are showing market buy minus sell. Magenta dots indicate there are more sellers than buyers. Green volume dots indicate more buyers than sellers. You can see the aggressive buyers coming in right at the cash open, and again just after 10 a.m. All right, I've got about a minute left. One thing I want to take a look at real quick is just what this combined signal for Magnificent Seven, a pretty similar setup. This is showing a combined signal for these stocks known as the Magnificent Seven. Apple, Amazon, Google, Meta, Microsoft, Nvidia, Tesla, they make up a large part of both the NASDAQ 100 and the S&P 500. So it's always important to watch those stocks and see what they're doing. All right, so I'm going to hold here for the S&P 500. Zoom in just a little bit. And I've got about 5 seconds to the announcement. Let's zoom in just a little bit. Initial reaction is positive. And the initial reaction or two can often be a head fake. All right, I'm watching CNBC. So, of course, as expected, FOMC holds the Fed funds at unchanged, 525 to 550 basis points. Quite a positive reaction. Let's just zoom out. So ES up to the highs of the day. Let's check NASDAQ. So NASDAQ trading above the 400 level, QQQ 400 level call wall, up toward highs of the day. Let's see what options traders are doing. Now ES trading up toward its upper weekly expected move. We'll zoom in on this chart. So really starting about 1:30, traders started taking positive delta positions. Note the hero flow shifted from negative to positive, that negative flow that began around 10:45. Let's just see what they're doing. So initially they started selling puts. That's shown by the rising blue line. So they stopped buying puts right around 1:30, started selling puts. Let's see what the zero DTE traders are doing. So that's making up a little bit less than half. Actually, the zero DTE number has been positive, although so traders with options that expire today have been net taking positive delta positions. Let's just zoom out a bit. So the green line is showing again trades that expire today for the S&P 500, the SPX, SPY, ES all have options that expire every day. So this is showing next expiry. So for the S&P 500, this is showing options that expire today. That number has been positive, is still positive for the day, whereas the gamma notional for the all expirations is slightly negative. And note yesterday the number for delta notional for the S&P 500 was extremely positive. Traders were buying calls hand over fist last couple days in the S&P 500. A good bit of that was zero TD, but they were buying calls. All right, let's take a look. Let's get rid of this next expiry. Go to the all expirations again. Actually, I'm going to take a look at a shorter time frame. So now I'm only looking at the last 30 minutes of data. So this will provide more sensitivity to the hero signal. And again, traders started taking positive delta positions. And as we saw a minute ago, selling puts. And this is showing that around 120. A little bit more sensitivity than the whole total 1 day look back period. And path to wealth. Sorry, I don't, whatever language you type that in, I don't understand that. And let's just see. So initially they started, actually this is showing they started selling puts and buying calls. Puts shown by the blue line, calls shown by the orange line, both rising. So they're buying calls and selling puts. That's a very powerful directional signal when both lines are moving in the same direction. All right, let's go take a look at Bookmap again. Wow. Very positive reaction. The Fed says inflation has eased but remains elevated. All right, Supreme Dream says NQ just went crazy. Let's check on NQ. All right, path to wealth. If you don't, if this is something you disagree with, or this doesn't work for you, move on. I think there is great value in this information. I think options trades and market maker hedging activity are key drivers of price in both the ES and NQ, as well as the many stocks that I look at. And I trade mostly large cap tech, here the Magnificent Seven and a few others, and options trades, market maker hedging activity are a key driver of price. And Path to Wealth asks, could I provide my option deals? I'm not sure what you mean. And Ships at the Strait of Gibraltar says, I think you bring so much value every time I tune in to you. I learn something new and valuable for my trading. Thank you. Thank you very much for kind words. I think this is at the heart of what is actually driving price. I'm looking at options trades, market maker hedging activity, and Spotgamma, and also order flow and Bookmap. And I think those two combined are getting to the heart of what is driving price. I'm not looking at other indicators. I'm looking at what is actually driving price. Aggressive buyers and sellers. In a Bookmap, I'm also looking at, so the volume dot showing me aggressive buyers and sellers. So in Bookmap I can see, let me zoom in on this. In Bookmap I can see the volume dots, green, aggressive buyers here, very few aggressive sellers. I can also see cumulative volume delta increasing. That's shown by this rising pink to dark blue line, and also buy stop orders fueling the move higher. Buy stop orders shown by the rising yellow line in the subchart, as well as the on-chart indicators. And large traders are selling this move higher with iceberg orders. That's pretty typical. They often sell strength and buy weakness. and not having much of an impact on price, maybe starting to slow it down a little bit. These are not large, these iceberg orders. If there was an iceberg order or an aggregate of iceberg orders in the four figures, that would be more significant. All right, so no, options traders are buying calls, selling puts. Market makers take the opposite side of that. So that's SPX, SPY, ES, buying calls, selling puts. Market makers take the opposite side of that. So they have to buy futures to hedge their delta exposure. Remember, market makers, options market makers always want to remain delta neutral. So they're taking the opposite side of the bullish or positive delta trades and buying futures. And remember, in a positive gamma environment, there's also that Vanna headwind as price increases. And path to wealth, I'm talking about my trading system right now. All right, so very bullish reaction in the S&P 500. Note 4,700 is the call wall. So that's still up above, but price is trading above the above the 465 call wall. Okay, so I just got a note here in text that the Fed sees 3 rate cuts in 2024, and that is most likely what is driving this higher. That kind of question about rate cuts in 2024, it looks like that has been answered now, and stocks are rallying. 10-year down at 4.05, 4.086. That's the 10-year note yields. Let's take a look at NASDAQ. So the Fed leaves rates unchanged, looking at 3 rate cuts in 2024, all very bullish. Let's take a look at some stocks now. And I had some stocks noted from this morning. So Hero remains moving higher. Let's go back to the all-day look-back period. So I'm now looking at an entire day's worth of data in that look-back period. Let's take a look at some stocks. So I had some stocks I wanted to take a look at from this morning. Very bullish day in Netflix. Note a couple of things on this chart. This is the Hero chart. First of all, this flow alert comes in right around 9:40. Very timely flow alert. And Netflix breaks above the 460 key gamma strike. Notice 470 is the call wall. Brief consolidation at that level. Price moves higher. And notice as options traders take their foot off the gas right around 1050, price levels off. Very typical pattern. Aggressive options traders in the morning take their foot off the gas, price consolidates. Let's see what traders are doing. They were buying calls. So net for the day, they have been selling puts. That's very minor, but that is positive. Delta notional. Been selling puts and buying calls, shown by the rising orange line. Let's go take a look at Bookmap. Go to Netflix. So there's that 470 call wall, and I'm pretty zoomed out here, but you can see the consolidation at that level. Just basically a small pullback. There's this consolidation as options traders took their foot off the gas, and now price resumes higher, really starting before the announcement, starting just after 3:30. So looking at what is driving price for Netflix, we saw the traders are buying calls. When traders buy calls, market makers sell the calls, and they have to buy stock to hedge their delta exposure. And that's a very powerful driver that can drive price higher. And again, I mentioned these are stocks, the stocks that I look at, often the key drivers of price action in these stocks are options. Again, traders buy calls, market makers sell the calls, and they have to buy stock to hedge their delta exposure. Also, there are a lot of aggressive buyers, shown by the volume dots here. Pull back to VWAP in the morning. Then aggressive buyers start to come in. A little bit of brief consolidation at the 470 call wall. Some sellers there. Also note the liquidity in the order book, showing resting limit orders. Those were limit sell orders. They were consumed. Some aggressive sellers, market sell orders, and then aggressive buyers come in and take Netflix right up to the next 5 level, from this 470 to 475. The resting liquidity again, a little bit of consolidation there, and now Netflix moves higher. All right, let's take a look at NVIDIA. That was another one that I had noted this morning. Sorry about that. All right, note all the aggressive buyers. There's the opening print, green volume dots, magenta volume dots on the pullback to VWAP, that's shown by that blue line there. Up to 485, aggressive sellers start to come in again. Consolidation back to 479, and then before the announcement, aggressive buyers start to come in. You can also see all the green volume dots here in this consolidation. Let's see what options traders were doing. Let's go back to Hero. Go over to NVIDIA. All right, Path to Wealth asks, is it reasonable to enter the market on a test of limit orders on stocks? Not quite sure what you mean. I'm talking about I've talked about setups here. I look at for a trending stock. I'm looking for setups on pullbacks. Could be to resting limit orders, round number levels, Spotgamma levels, or VWAP. For day trading, I'm looking for reactions at levels for reversals combined with Hero, often a divergence, and for trend increase, again looking for pullbacks to resting limit orders, round number levels, Spotgamma levels, or VWAP. And sure, yeah, that's that's one of many things that I look at, limit orders in Bookmap. All right, here's NVIDIA. Let's zoom in on this. Very similar to Netflix. Very strong in the morning. Traders taking positive delta positions. Very timely flow alert. 480, the key gamma strike. Price moves above that level, comes back and retests that. So path to wealth, there you go. There's your pullback entry. We'll take a look at that in Bookmap in just a minute. And in the case of NVIDIA, options traders take their foot off the gas right around 10 a.m. Price moves a little bit lower and now started to move higher again. Let's see what they're doing. They're buying calls. That's shown by the rising orange line. Blue line is basically flat. So net, they are slightly buying puts. That notional value minus 3 million versus notional value for calls at 400, positive 400 million. So the blue line puts are not significant. So again, when traders buy calls, market makers sell the calls, and they have to buy stock to hedge their delta exposure. And I think this is a very good indication of the significance of looking at options trades as a driver of price for stocks. Traders buying calls, market makers selling calls, they have to buy stock. Call buyers take their foot off the gas, price moves lower. And also they started buying puts right around the same time. All right, let's go take a look at Bookmap. So huge move up in NVIDIA in the morning. Let's zoom in on this. So there's this up move in the morning. All right, path to wealth says it's important to have a leading indicator, not one that matches the price. Sure, you can't always get that. Sometimes Spotgamma does act as a leading indicator, and sometimes as a confirmation. So one of my favorite setups is a hero divergence. That doesn't happen all the time. I look for it. Let's go back. Go back and look at a hero again. I'm going to zoom in on this. All right, so look at hero, more of a confirmation. Look at this flow alert here. This came in at, let's check the time on that. Oh, it looks like 9:32, something like that. So if you were watching the alert, you got long at 9:32. I'd say that was a pretty good entry. A flow alert is an alert from Spotgamma indicating significant options activity. They also show up here. And yeah, I would have to scroll back. There are a lot of alerts. So flow alert, again, this is part of Spotgamma Hero, indicating significant options flow and something to get your attention. So if you were specifically trading NVIDIA today, saw that alert, or were just watching this stream of alerts here, and got long at 9:32. Let's go back, take a look at Bookmap now. So got long at 9:32, or right around here. So you had a pretty good day let's say you got in right around 479 up to 486. All right, so again, sometimes Spotgamma Hero acts as a leading indicator and sometimes not, but not always. So you just get you get what it shows you. All right, one other stock I wanted to take a look at is Tesla. And let's see if Tesla has turned around. So for Tesla, the bad news continues. Looks like it is turning around. Let's go take a look at Hero. Take a look at Tesla. So in this morning, I think there was news about recalls for Tesla. Zoom in on this chart. Note 230 is the put wall. And price did move below that level, but it pretty much acted as support. Did its job. Another flow alert, again indicating significant or high options activity. Very timely. And traders were buying puts. When traders buy puts, market makers sell the puts, and they have to sell stock to hedge their delta exposure. That's shown by the blue line. Let's go back and take a look at Bookmap. So now Tesla recovering. And entries for a short. There's a pullback to VWAP as traders were taking negative delta positions, buying puts. VWAP shown by the light blue line there. Or let's go back and check the S&P 500 now. All right, looks like some consolidation right around the upper daily expected move. Also that 46.76 level noted as resistance in the Spotgamma founder's note. And NASDAQ did not, at least so far, NQ did not quite make it up to its upper daily expected move. And now maybe finding resistance at the 16,500 level. Let's see what options traders are doing in the S&P 500 and NASDAQ. I'm going to shorten the time frame again. So now I'm just looking at the last 30 minutes of data. This gives a little bit more sensitivity to just again the last 30 minutes. And so far the hero signal still continues to trend higher, making higher lows. So traders continue to take positive delta positions. So they continue to buy calls, and they have also started to buy puts. Sorry about that. All right, Path to Wealth asked, do you think we should wait for a correction or should we just go ahead? I'm not sure I understand your question. Are you looking for, if you're looking for a long entry, I would wait for a pullback. I always wait for a pullback. And it's 2:30 now. The press conference begins. Jerome Powell will be speaking momentarily, and that could have a significant impact on what happens for the rest of the afternoon. But again, just to summarize real quickly, the FOMC has left the current Fed funds rate unchanged, and then they are targeting 3 rate cuts next year, 2024. Let's go back to Bookmap. All right, everyone, it's 2:31. Jerome Powell is speaking. I'm going to wrap it up here at this point, and you can take it from there. All right, thanks for watching. Thanks for your questions and comments, and I will see you tomorrow. We'll take a look at the aftermath of the press conference. All right, thanks again, and I will see you tomorrow. Bye.